Burgess and Bolton's weekly wrap-up.
Hello, Ben.
Hello, Jeremy. Happy Friday.
Happy Friday to you too. And welcome everybody to this week's edition of Burgess and Bolton's weekly wrap-up, where we look at everything to do with the London market, technology, change, innovation. This week, we're going to focus on the announcement of the financial results from Lloyd's, and we're going to give a bit of a breakdown. And I'm going to concentrate mainly on the implications for technology, Blueprint 2, and the operating model. And we're going to talk about the weather. We're going to talk about buying car insurance, AI. Got a lot to get through. It's all good. So, should we start, Ben?
Yeah.
So, as mentioned, the Lloyd's results were announced. Do you want to talk about the results first?
Yeah, I can do that.
Yeah, because they were pretty impressive.
Yeah, I mean, just to say one thing that I think Patrick Tiernan has done that I don't think many other Lloyd CEOs have done in the past is he said thank you to the market and its participants and said this is down to them, and didn't just take all the credit for Lloyd. So well done, Patrick Tiernan, because I think that'll go a long way in the market. So remember, these are the aggregated market results. So they're not Lloyd's results as such, but they often get even in insurance press. Sometimes it says, "Oh, Lloyd's the firm made this amount of money." Well, it's not a firm; it's a market, and it's a franchisees thing. And I think that is probably something that Lloyd should look at. But anyway, that's good. So 57.9 billion. Just to say the actual main one you look at is the combined ratio, which is slightly ticked up from 86 to about 87.6. So that was GWP 58 billion, and the combined ratio is just under 90%, basically, which is good, obviously. So it shows it's profitable, working well. The expense ratio, so that leaves total capital in Lloyd's now just under 50 billion. So healthy, way above the thresholds for capital provision in insurance. And that's important. I'll come back to that. So expense ratio, though, has increased to 35.6%. So they're still close on 40%, 40 cents in the dollar or 40 pence in the pound in old money is going still on cost. Now, it says in a couple of the articles, this is down to increased commissions and acquisition costs, i.e. broker costs. I think that will be a debated point. I think, of course, commissions might go up a bit now, but rates are going down. So I don't know where that number comes from. I'd be interested to see what the broking world says about that. But actually, however you describe it, it's still near 40 points. So that is an important one to focus on for the market, because the cost is still a big issue for it. Yeah. But generally speaking, the other thing I think that what has contributed to this, I think, is, of course, Lloyd says it's the brilliance of their underwriting and the discipline and everything else, but quite frankly, they haven't had many cats either. So I think the major claims is 5.8%. So there's been a very benign period of claims, and that's obviously helped the numbers there as the market has softened. And so that's, I think they've got a bit of, I think Forex money's gone up a bit, but anyway, returns perhaps on investments are not great at the moment. But they've got, if they don't get big claims, then of course they make more money. It's pretty obvious.
Yeah.
So yeah, good numbers, record profits. That's good for them.
Yeah, definitely. And I think really got anything to add to that, but I think what was interesting within the kind of results was kind of the statements around the blueprint to the operating model, and things like that. And I kind of picked up, well, it was picked up not just by me, by the press as well. So Lloyd's shelves plans to digitize insurance market, insurance business. Lloyd pauses blueprint 2 indefinitely as market calls for radical rethinking. Got a number of people quoted in that article. It's well worth digging out and looking at. It's, you know, at the time when they're posting these financial results, and then at the same time they're kind of stepping back from the blueprint 2, and there's a reset around technology and the operating model strategy. I think we've preempted this for a while. The opening statement when Tiernan came in way back in the autumn of last year, then it was broken again somehow. It was another splash in the press. But you know, it does ask the question, kind of, where are we moving to? And I think it was Chris Croft in one of those articles that said, you know, we are in danger of moving into another period of drift if we don't have a kind of plan and a strategy around kind of the operating model and the technology infrastructure in order to enable it. And I think we need to probably step back a bit before we talk about the future and just you know, what went wrong with the blueprint 2? You know, was it solving the wrong problems? Was it solving the right problems but in the wrong way? You know, it's quite interesting just to kind of reflect for a moment.
Well, I mean, if you've got, I don't know if you've got a snip there, but I did have a look back at what the original, what the last really kind of bold new strategy was in 2018. It seems rather old now, but clear. So just to say, I think the Tiernan strategy, as is really what he actually just says. It's a back to our roots strategy. In other words, we're not going to do all this other stuff because that's all failed. We're going to do the stuff that we can do, that's within our remit to do, and within our gift, I suppose, to do. And so he's talked about 4 things: underwriting performance, which is of course quite important; efficiency; maximizing what they calls the capital advantage of the Lloyd's model; and culture. No, which he doesn't say much about culture yet, but the point is that he's saying, let's sharpen our financial edge. In other words, look to how we make money, make that work, reduce costs, don't increase cost, don't put more burden onto the market, and all those sorts of things. So it's you could, but now just to say, he also talks about new risks, taking on the front foot about these new risks like data centers and all that sort of thing, not ruling things out that we're not going to write, just using innovation across the market to do it, and so on and so forth. So he's basically saying, let's do all the things that we've always done well, but do more of it and do more innovation. And then we'll take care of you take care of the innovation, we'll encourage it, but we'll take care of the bigger stuff, you know, the capital model, which should be an advantage to business, and those placing risk. Well, we'll see. You know, it's a world where there's a lot of capital at the moment. Efficiency, well, again, that's got to be, we'll come back to that in a second on blueprint, and performance and culture, and, you know, yada yada. So there's a lot. That's kind of where he is. All very sensible, you might say, but it is basically a shedding of all of the kind of technology ambition that Lloyd's had. And I think it says very clearly, we ain't doing that anymore. Now, just compare this with what was said a few years ago, 5, 6, 7 years ago. This is the bold new idea: platform for complex risk. A platform they're talking about doing business easier and making efficient digital placement. Never happened. Lloyd's risk exchange, through which less complex risk can be placed in minutes at a fraction of today's cost. Never happened. Flexible capital probably is there. That's what he's still talking about. Syndicate in a box, I don't know, didn't really take off. You did it, don't know what's happened to that. Next generation claim service definitely hasn't happened. Customer experience improved. I think the market's got better at claims. Claims payment speed sped up? Not really, I don't think, according to the brokers. Could be quicker. Sometimes they still say that's embarrassing. Ecosystem of services that helps all market participants develop new business and provide outstanding service to their customers. Nope, I don't think so. I think that is that strategy was a spectacular failure. I'm afraid. I don't think it hit any of those things. It definitely didn't hit them with the timescales, and it got wrapped up. So I think your point about standing back is that we talk about Blueprint 2 now. We talk about the narrow purview of technology and what it was supposed to do in the digital thing, and that's what the press is talking about. But originally, this was a much bigger idea, which was that technology was going to be put in place. It was going to enable better service, more entrepreneurialism, innovation, all of those things. So the bet was on, which I think we said at the time, Jeremy, this is too much about technology is going to be the silver bullet that will do all of this. How's that really going to happen? And it wasn't. And we were right. They were wrong. And a lot of money has been spent and gone under the bridge. And now we're back to where we were with the view. And so it's quite interesting what Chris Croft says, but also I think they quote our old mate Ben Rose of Superseed.
Yep.
He said, it doesn't matter about Blueprint 2 going because the market's already voted with its feet. We've got all sorts of technology things going on anyway. And, what does so Tiernan talks about the ecosystem of intelligent solutions built on common data standards and interoperability. Yep. What does that mean? A kind of operating model and data standards, I guess he's talking about. So that's the limit of that. That's their remit.
Yeah. So I picked up on that as well. So the future is not one platform. It's an ecosystem of solutions and shared standards. So Lloyd's will become standard setters, not system owners. It's a move from kind of central build to market-led innovation. And basically every firm is now responsible for their own tech stack, which, you can view it either way. Either that's massively empowering to the market or is going to fragment even further with kind of more friction put in because different organizations are doing different things. And, coming back to that kind of operational efficiency that you just mentioned there, I think that was a core theme in the report, reduce cost, time, reporting burden, duplication, these were all highlighted. But in reality, that kind of friction is, the bordereau delays, the manual processing, the rekeying, inconsistent data, slow onboarding, all this stuff that, we've been talking about for years, really. And it kind of questions, is technology the problem here, or is it the operating model? Is it something a bit more fundamental than just a technology project that hasn't worked? And I think it does open up the question around, you mentioned culture. The two things go together. You need to have an open, collaborative, innovative culture in order to question a fundamental operating model and come up with new ideas in order to do that.
I don't disagree on that. So I think you've got. Sorry, you finish. Yeah.
No, so I just really and asking a bigger question. Is this really a technology problem, or is it something more fundamental than that?
Well, yes, I do agree with you. I think that so they've given up the ghost on saying we're going to have a kind of enterprise system within the Lloyd's market, and that's now not going to happen. The corollary of that is to then say, well, everybody's either doing it already, or you should do it, which is develop your own systems, and we'll join them all up in some way, shape, or form, and we'll kind of look after data and standards and things like that. I don't think that, given the history of Lloyd's, I don't think that completely makes sense, because quite frankly, you shouldn't let them near another technology project ever. So that is good. I think the world has shifted, as we know, into much more into tech. It's much cheaper, can be done at a local level, and can be joined up quite easily. So we don't have to have these enterprise schemes. And I think what Ben Rose calls moonshot type programs, because they don't really work, and they never were going to work, which I think is what we have talked about too. So where does that? But you're right. Your fundamental question is, where does that leave Lloyd's, and where does it leave the whole market? Well, I do think it leaves it in a. So I think his play here really is partly to say we're here to innovate and write risks, find new risks, help the world to get risk off their balance sheet and cover it in this product called insurance or reinsurance, which enables a sort of pooling of funds to protect business and grow business. And that's that's kind of almost a purpose statement, really, of what insurance does or should do. So it is very much back to basics, back to the roots of the market. And but the problem, and implicit in your question, is it innovative enough, and is it innovating, or are these businesses just not doing that? And I think we wrote a report with Lieber halfway through this year, which was basically saying there isn't enough innovation and there's still a massive protection gap. So to some extent, Tiernan is probably also tilting at that, rightly so, which is to say, if we don't innovate, and I think he may go stronger on this message going forward, because he's got to kind of manage the PR on the tech bit, and then move to the next phase. But if he says, right, okay, you're all doing your own things, we're trying to get out of the way, but you've got to innovate, you've got to do stuff, otherwise that's it. We'll do as much as we can. So I think from Lloyd's perspective, they've got to watch the space and say, what are we here to do, and what are we definitely not doing? And there's quite a lot of that in this strategy, which is we will do things for you when you need them. We'll get out of the way when you don't. But the thing about innovation and so on is not negotiable. That has to happen. But that's not something that Lloyd's owns. I think that's something that's right across the market. So then you've got to say, have we got the right sort of businesses? Does the model encourage innovation? Is even the subscription model the right model for this sort of thing still? I don't know. I'm just throwing that out there. But the lead follow, it's a clunky old system, Lloyd's, when it, still, and that's one of its problems, is its capital in other places can be deployed more easily and more quickly. But does that trading, that subscription model, look a bit outdated now? Well, it's obviously going to algo, lead follow, which could help, but and that's probably one of the most important things, is the lead. What does lead look like in the future? That if you are leading on a risk, are you kind of innovative out there? You get paid for that. You almost become a consultancy. You're working right across the value chain with brokers, loss adjusters, everybody who's got, and the data, and saying we can write this risk globally, we can capitalize it. That's that could come out of an Allianz or a Liberty or a Chubb or anybody, and it's like that's probably where innovation will start to work. And what's Lloyd's role in all of that? Well, a capital fund, the disciplined underwriting is a bit, yes, they've got rules and regs, but these are global businesses now, so a lot of the Americans don't play to the rules and regs of the disciplined underwriting of the Lloyd's businesses. Yeah.
So it's almost like from control and centralized enforcement to kind of enablement and principles-based oversight.
Yeah. Yes, I think it's encouragement of, I think it's saying, he says this quite interesting thing about sharpening our financial edge, and they will always ask that question, does this sharpen our financial edge? Or does it get in the way? And if it gets in the way, then that's it. We're not doing it. So your point is exactly on the money, which is they're now thinking, not what more bureaucracy can we do to wrap these people in knots. So there has to be, you are then back to culture change. You are back to, does the Lloyd's business, the people in those businesses and the departments and the long-standing structures and cultures and microcultures, do they change because Tiernan says it's going to change, or do they actually just still, do the same old thing and create more bureaucracy, more regulation, quasi-regulation, and restriction? If they do that, I think they're sunk.
Yeah.
I really do think they're sunk, because I don't think businesses now that the handcuffs are off on the technology front, we can see what's happening there.
Yeah.
You don't know it's going to work, but you can see it's all up for grabs, isn't it? TinTech showed that everywhere. We can see that.
Yeah.
But that's already happening. The businesses, I know from working with them, are all talking about change and strategic direction and where do we go. And we're talking about how do we use data, how do we get data, how do we sort it out, how do we then deploy data and knowledge. So everybody is kind of, that leadership position is churning through this thing of what value can we add from what we already have. But that isn't that isn't as cross-market collaborative as it used to be, and it's certainly not kind of corralled and controlled by Lloyd's in the future. So what happens if a business does innovate on its own? Does Tiernan say, well done, and then they say, thanks very much, Lloyd's, you helped us? They might not. They might say, you didn't do anything. You're not that relevant to us. But
yeah,
I think it's again going to be back to what do the franchisees of Lloyd's think is the value of Lloyd's?
Yeah.
So read the press and see what the reaction is, I suppose, of the senior leaders in the business. I think Lloyd's here is a much more practical operator, but interestingly, it doesn't say much. I mean, he does talk a bit about being the leading risk market and things like that. I'd have thought do more with the brand in a different way. I mean, I've said this for forever, really, which is why doesn't Lloyd's really set out a position as being, this is the leading risk market, leading innovator. Maybe that's what they will do now, but it's what do we think? Do we think it's good? I suppose it is in a way, but it's a shame it's taken so long to get back to the future.
Yeah, and I think you kind of already highlighted it, but with that new approach, less burdensome, more kind of right, everyone go out and do your thing. There are risks to that, as you've already highlighted. If Lloyd's aren't having that kind of leading role in that, who ensures the consistency of it? There's a risk of fragmentation, people doing the same things, duplication around initiatives,
and there's a significant risk that the brokers go to somewhere else for capital now. They don't have to take it from the carriers in the market. I think that the event we did a few weeks ago where Mark Gagan was just playing devil's advocate to some extent, but saying, why does it have to be balance sheet insurers that are running the capital in this market? It doesn't necessarily. It could move completely and be different players altogether. So you might well be seeing a big shift in the whole makeup of the market, and none of this is off the table. And then in a sense, none of it makes a difference to the end customer, because as long as they've got to capitalize, they can capitalize a risk off their balance sheet and transfer it. That's what they want to know. They'll need a claims service, by the way, but other than that's it. That's kind of what we're talking about.
Yeah, definitely. So my thoughts on what does it mean for insurers, brokers, and your vendor kind of community? So for me, for insurers and MGAs, and we're already seeing this. We've seen this already, but they're investing in data, they're investing in workflows, innovations around automation and AI, and kind of looking for, you've already said it, kind of that strategic direction, and then building the capabilities to enable that. I think for brokers, they're going to have to navigate kind of multiple systems, varying standards, whether that in data, the ingestion of the data, and then what they do with it. And then for vendors, I think it's a massive opportunity. If Lloyd's are no longer saying, okay, there's going to be one system, everyone's going to play. Well, that means there's going to be, well, you can see lots of smaller people coming in, solving areas of the business that are.
Yes, and I think it's, we can be cynical about vendors and all that, and tech companies, but you also know that they want to innovate and do different things. And I think they've been frustrated, I think, often in the market with the controls and the kind of way that things, favoured players have been looked after and all that sort of thing, with Lloyd's being involved and having shareholdings and investments. And I did think that was wrong, and I still think it's wrong. I think now, if you've got a free market operating, as I've always said, it's much, much better in this world to just let that play out, because, insurers are quite capable of deciding, who's any good in that market and choosing, but they don't want a restricted selection, or to feel that by choosing something that's not the Lloyd's preference, they're going to have a problem going down the line. Now they don't, I don't think, and they can get on with it. I hope that will unleash all sorts of positive things. I think the other thing we've got to talk about is talent and, in people, and where that goes in the future, because this shift now is going to move very fast. The technology is going to happen, is going to be the thing, and that is supposed to enable, how do we do this innovation? Now, that isn't going to be done by a computer or electronics running through systems. It's going to be done by people getting out there, working out what's needed, getting close to the customer, and so on. And I think that has to happen too. Whereas I argue London is underwriting-wise, a very passive market. It sits back, waits for the risks to come. That's not true in Singapore. I don't think that's true in Bermuda. Bermuda's won a lot of reinsurance on that basis. Not true in the US. So I think we've got to, if you're looking at it as UK PLC or Lloyd's as part of UK PLC, then I think that the call to innovate isn't just about, can we have better insurance products or be efficient? It's about saying we really need to compete to be better than other parts of the world, or you work with those parts of the world to make sure we get a slice of a slice of the pie that we deserve for the work we put in, and the thought and the thinking we've done. The point, I suppose, is this, over all of this, if this is what they're saying, and I think it is we're freeing you up to be innovative. I mean, again, Ben Rose talks about the Lloyd's Lab being a really great example of stuff that has worked quite well. I don't know that much about the Lloyd's Lab. I know a few things have come out of it, and maybe he's saying that because he came out of it, I think. But I aside from that, I do think he makes a good point, which is that, that kind of incremental technology modernization is better and will work, whether we're the best at it. But in the UK, I do think we have that sort of culture. We've got it in F1, we've got it to the extent in music and creative arts and design and things. We're good at this sort of stuff, this kind of higher end stuff, which you get in mature economies. Good at, quite good at innovation in a lot of areas, and this could be something that should be applied to insurance. So we should be looking for innovation funds and looking to other sectors. I think, as we said in the Libra report, looking to the tech sector, looking to behave differently when we develop stuff.
I think the last thing I'll say about this is, reflect back to TinTech London Market a month ago, and there was no mention of Blueprint 2 in any of those sessions, and still the conversations were looking forward thinking, looking to solve business challenges using tech and AI and automation. And it was almost like the shackles were off. So I think that this is kind of just rubber stamping what everybody already knew anyway. And to Ben Rose's point, the market has already walked really, and I just think we're in for a period of massive innovation. We've seen the market move, the smart follow stuff. What does that mean for lead? You've already kind of mentioned that. The AXA XL Marsh initiative. It's just really exciting, actually solving business challenges through collaboration and communication. And I think if people now go, okay, right, to your point, it's market forces, and we need to be it. You know, some of this stuff is table stakes. We need to invest in. Some of this stuff is going to drive some, short-term competitive advantage before the rest catch up. So,
I think, I agree with all that. I think the other thing we've got, to say, and yes, lots of people have come out. I mean, there is veiled criticism, I think, in a lot of these comments, but they are, I could be more straight about it, or you and I can be more straight about it. It's pretty obvious that what happened with Blueprint was it started to go wrong quite a long time ago, and then it was kind of covered up and saved, tried to be saved, and endless kind of reworkings of it on paper, shifting the deadlines, moving everything. Now that has taken years, to play out, and I think it was pretty unforgivable that was happened, because it slowed the market down. I mean, if you weren't one of the biggest, global insurers without all those resources and all that knowledge, you were just literally waiting on that to happen, and you kind of knew it wasn't going to happen. And all you got was soft soap to say it's all going to be okay. Don't worry, it'll all happen next year. Oh no, sorry, next year. And then next year. And then, oh no, actually, now it's not going to happen. Well, thank God, at least we've got some honesty and some straightforward thinking. And I think that this is a line in the sand. I hope Tiernan, I think well done, Patrick Tiernan. Well done to Lloyd, but particularly to him for saying it and getting out there. The focus should now be on Lloyd's pushing the market more than it has, and definitely they've got to get rid of this kind of, pretending that we're doing a great job. They're not politicians.
Yeah.
They behave like politicians, they behave like that kind of, we're going to get re-elected, so let's just pretend it's all okay and, make sure we've controlled the narrative. This is a commercial market, it doesn't help to do that.
Yeah. Good. I enjoyed that.
We're going to have to show the show where we first saw that, what we commented on, because I'm pretty sure we were pretty much saying the same thing at the time it came out.
Yeah. We came up with 5 fundamental questions we were asking of Blueprint, didn't we?
Yeah. And I bet we'll have to find that show and dig it out and see what it said. Yeah.
Good. Excellent. Right, what should we talk about next? I'll talk about some. So I bought some car insurance this week, and for my daughter, so she's learning to drive. So got a little run around little car for her to drive and learn to drive in. So I thought, well, how do you do this? And apparently, the best way to do it is the vehicle's in my name, I insure it, and then you buy an additional policy for my daughter. Which is a learner policy. So Insured added the car to my Admiral multi-car thing. And that was like, God, it was like pages and pages of stuff. I was like, why do you need to know where I live? I know where I live.
Yeah.
Anyway,
know.
Surely. Anyway, so got all through that. That's all fine. A multi-car discount added up to about £7.80.
I've tried that. Yeah, pointless. Why do they market that as just no saving at all?
Oh God. Anyway, so then went on to do the second policy, and I think the first one I went on to, there's a number of them that do it, kind of Marmalade, and I think it's Vago and Collingwood. I don't know. They specialize in these learner driver packages. So went into the first one, put in a few details around Holly, bang, straight away. Here's a quote. Do you want it or not? If you do, fill in the rest of the details. The second one was from the driving instructor that had a little number at the bottom that's supposed to be a discount code. So I thought, I'll get a quote from them. I might as well. But I had to go through the whole process of putting all the details in, driving license, before the quote popped up.
No.
So it was literally 20 minutes of input in.
No.
And I was like going, what? Another page. And it was cheaper by about £4. a month. And then the discount code, brilliantly, from the driving instructor saved us £1.06.
What? I mean, one of the things about all of this stuff is not just how bad insurers are at all this stuff, but they've fallen for every trick in the book, haven't they? Discount codes that don't really offer discounts. They're not. It's classic kind of really amateurish sales stuff, which is like, oh yeah, if we offer a discount code of £1, it'll be fine. You haven't actually asked any customers, because none of them will care. What they'll want is convenience. They'll want to be able to spend 20 seconds doing it and saying that was great. You didn't need to know there was a discount, but once it's there, you're kind of going, oh, I better try it out, test it out. I think convenience trumps discount.
Bosh.
Well, I'll give you an example. I bought a garden machine, a lawnmower, ride-on lawnmower, right?
Garden machine.
I got a big garden machine. And I did kind of think, right. So I bought it from my local garden machinery dealer. It's like a proper shop that does garden machinery. It's very good. And I mentioned before. And so I could have got it online somewhere else, 200 quid cheaper. 150, 200 quid cheaper, right? So I thought, no, I'm going to go to the local one. Now, I hadn't fully remembered, but then they said, oh, actually, we're a dealership for that, but we're also a service center for that machine. So any problems you've got, we're 5 minutes up the road, we'll just pick it up and fix it. Now, for me, that is fantastic. That is because otherwise you'd have to go find the retailer you bought it from online. Then they've got to send it back to the manufacturer and so on. It would be a nightmare, really difficult, very inconvenient and difficult. And you'd have to pay for it anyway, probably.
Yeah.
I basically got free service now, as long as it's not something I've broken. But that's what you want in life, isn't it? Go back to your roots, like Patrick Tiernan says.
Yeah. Good.
It's gimmicks, otherwise, I think that's all it is. Gimmicks.
Yeah. And when you're buying something that is pretty important, your daughter's car insurance, getting £1 off is not the priority here. It's is this going to work in a very stressful and potentially, dangerous environment? So
you're not teaching her to drive, are you?
Yes.
Oh dear, oh Lord.
Why did you say that?
Surprised you got any insurance. Did you put that on the form?
Yeah. No, I didn't. She's having proper lessons from somebody who knows how to drive, but then I can sit next to her and she can drive me around.
Yeah, that's all right. But
yeah, I'm not teaching her the fundamentals of how to drive. No. Because to be frank with you, Ben, and having done the theory test, because you can just have a go at it and fail, I don't think we'd pass.
Nowadays. No, we wouldn't. No,
it's a different kettle of fish.
Exactly.
There you go. Right, that's my story about insurance. Let's finish off by just talking about the weather, because today is the spring equinox, Ben.
Yeah, I thought so. Yeah, I did know it actually, but it's good. So that's the end of spring.
Is it?
The start.
The start of spring.
Start of spring. When does summer start then? Summer equinox, presumably.
Yeah.
I kind of thought we were well into spring, but yeah.
Well, according to the BBC, it's today at 2:45. So we've got another couple of hours.
Nice. Yeah. Well, spring, very spring-like here.
Yes, quite nice, isn't it? So, right, what are you doing this weekend? Anything good?
No, I'm all alone. All my
family and your garden machinery.
Me and my garden machinery. Yeah, I might just mow the lawn for fun again. That sort of stuff. Yeah, I'm not going to do a lot. Do Might do a couple of little walks. I mean, I'm not alone for long, but that's nice. Yeah, bit of me time.
Good.
As they say on all the female influencers, I want a bit of me time.
Yeah, excellent. I wouldn't go into that. What am I doing? I am also home alone. My wife's working this weekend, so
we can meet up and then go to the pub.
What I was thinking the same. So I'll come down to your place. I'll get the train down.
What a coincidence! Yeah,
great.
That's our weekend sorted. Nice one.
Good, excellent.
Lunch.
Glad we called. All right, thanks for tuning in, everybody. We'll be back next week. Have a good weekend.
Nice one. Bye.